Good evening, students. Welcome to the live learning classes organized by Board of Studies ICAI. Today's evening, I'm going to deal with this interesting topic called foreign trade policy. Before we start with learning, as a protocol, please confirm you are able to see my screen and also you are able to hear my audio properly. Once I have confirmation from some of you, then we will start with our today's discussion. Good evening, Namrata. Good evening, Mansa, Shailesh, Viraj. Good evening, all of you. Hope things are going on well. You have studied all the topics what we have discussed so far. You also did a bit of recap on basic aspects of customs duty, classification, exemption, valuation, various kinds of customs duty, and the procedural aspects of baggage what we have learned. Right? Yeah. Thanks for the confirmation, Shailesh and Amrita. Let's kickstart with our today's discussion. So today's evening, I'm going to throw a basic understanding on making you to understand what is this foreign trade policy. We have studied GST, we have studied customs law. Now we are going to study something called foreign trade policy. In income tax, we have studied income tax. We also studied transfer pricing, which is more to do with your international transaction. International transfer pricing. So similar to that, in indirect taxation, this is one small topic, which is an ancillary topic, but which is little interesting from business perspective. So I'll try to show you 360 degrees of what is there in this foreign trade development regulation and what is it we will understand from this. I'll make you run through the salient features of foreign trade policy 2023. There are 11 chapters in foreign trade policy. Our institute material, the new material, what we are going to study today is set from this 2023 framework point of view. Then few administrative aspects, like I'll make you through, just have a overview what all aspects are to be studied when we think of foreign trade policy. And detailed contents, what is it? Principles governing the imports and exports. One small interesting topic on status holder concept. Then few schemes, duty exemption, duty remission schemes under foreign trade policy. Now, when you talk about this duty exemption, duty remission scheme, year on year, there is a change in the nomenclature, but the benefit of the scheme remains the same, like MEAS, SEAS, RODTEP. Now, these schemes are more or less same fundamental. But the nomenclature changes as there is a change in the global practices. Even the government has to adopt those practices to match in line with the international practices. So if you happen to read the FTP, say 2020, you would have come across merchandise export from India scheme, SES, services export from India scheme. The same is replaced now with a new scheme called RODTEP. I make you read through in detail that particular scheme in today's session. And also I'll make you to understand what is the difference between exemption and remission. And this is my starting slide, which I wanted to make you understand it. Department of Ministry, the Department of Ministry of Commerce and Industry. Commerce and Industry. This is a Department of Commerce. This is dealing with this particular topic called foreign trade policy. Like if you see customs law, if you see GST law, it is under the Department of Finance. Under Department of Commerce, that is Trade and Industry, we have this policy called foreign trade policy. Quite interesting. Our regulations in relation to foreign trade policy are regulated by this particular ministry. That is Ministry of Commerce and Industry. And for those who are aware and who are not aware, this particular ministry is headed by Sri Piyush Goyal. And Piyush Goyalji. He happens to be a chartered accountant and he holds all India second rank in his CA. Also, he is a law graduate from Mumbai and he secured second rank. So it's a pride matter for our alumni where, being a chartered accountant, he is serving the ministry at a helm of affairs. So as on date, the head of this Department of Commerce is headed by Sri Piyush Goyal. And one pride picture which is there on this Department of Commerce, Ministry of Commerce and Industry. This particular picture, look at the way they have plotted. First flagship iPhone from India plant. From India plant. What this is? The I in iPhone 11 now stands for India made. So this iPhone is India made phone 11. So this is how they have branded iPhones which are manufactured in this factory, Confox in Chennai. So this is one greatest achievement because Foxconn is one manufacturing entity which manufactures this iPhone setup in India. Now, across the globe, all the iPhone 11 manufactured are supplied from India. We had this principle called Make in India, Atmanirbhar Bharat. All these are the basic aspects where this Department of Commerce, which is nothing but Ministry of Commerce and Industry, they regulate policy matters. They regulate policy matters in relation to import-export. Earlier, we used to call this as exemption. Export-import. This particular name, now we are calling as foreign trade policy. All the matters in relation to exports and imports, in relation to regulation, restriction, and policy making are the responsibility of this particular ministry. Under Department of Commerce, the entity which is carved out, we call as DGFT, Director General of Foreign Trade. So if you have to get any notification, any information, we visit this particular website called www.dgft.gov.in, where IEC, like basic example to examine is IEC. To register a particular person for the purpose of trade, we need to have import-export code. This importer-exporter code is issued from this particular wing called DGFT, Director General of Foreign Trade. Now, under Ministry of Finance, we have tax matters. We have tax matters in relation to GST, in relation to customs. These two aspects are harmoniously integrated with a policy made by DGFT. The act which we refer is your foreign trade policy. We refer foreign trade policy 2023. As on today, what we are going to study is on the basis of foreign trade policy 2023. So here, my tax exemption, tax levy, which are there under this particular statutes, are either relaxed or incentivized under foreign trade policy. That means to say, for a moment, to take an example. So as a manufacturer, I have imported some goods. And these goods have been put into a process, and after the process, these goods have been exported. So here, once the goods are exported, the exporter gets a benefit called duty drawback. The duty drawback is regulated by Customs Authority. In addition to duty drawback, we have something called refund of duties and taxes on export goods, RODTEP, which is an incentive, which is given by the Ministry of Commerce, Ministry of Commerce and Industry. Right? So these are additional incentives. These are additional incentives to the incentives given from Customs Authority. Also, there are regulations where when we import the goods, let me take one blank slide. Now, when goods are imported, there is a need and necessity to pay customs duty. Along with customs duty, there will be various additional levy under Section 3. There will be a levy of, say, your safeguard duty or countervailing duty or anti-dumping duty. In addition to that, GST, which is called IGST, along with compensation cess. Now, all these duties can be relaxed by way of a incentive, that is through authorization. The term authorization is nothing but a license. It is a license. The authorization is given to the importer using the respective IEC, using the respective GST to import these goods without payment of duty. And this Ministry of Commerce and Industry, under the able guidance of DGFT, with respective regional authorities. Now, we have under customs law, we have officers, proper officer at port, proper officers for admin point of view. Similarly, under DGFT, we have authorities which are called as regional authorities. Regional authorities are the authorities who issue the desired license, that is called authorization. And on satisfying the particular export obligation, they issue something called discharge certificate. That means to say, the exporter or importer who have availed a particular exemption from customs duty are under the jurisdiction of DGFT, where respective process is undertaken and the respective goods and services are in turn exported within the prescribed point in time. So here, this particular regulation of business is in addition, it is a authority in parallel to customs authority. Now, also to understand, if you look at this particular DGFT, you might have been wondering. So we have something called Ministry of Finance. We have Ministry of Industry and Commerce. What is the purpose of these two particular ministry? Ministry of Finance, they regulate taxes and duty. Ministry of Industry and Commerce, they regulate the business, the trade. They regulate the trade. So when they regulate trade, it is not just giving a permission for import or export. Rather, they try to look at the overall a picture of the business, giving incentive, giving promotional schemes, putting check mechanism, and also making respective agreements with various nations. Like one of the example, say authorized export operator, authorized export operator, AEO scheme. As of now, this particular AEO scheme is executed with China, USA, and North Korea. The advantage of this particular AEO scheme is where any goods which are exported from India, they are put to a less rigorous verification process, and those goods are cleared in a fast track manner. So any consignment which goes from India to say USA, generally there will be a customs procedure where there will be a opening of container, inspection done, then few laboratory checkups are done, then sending the consignment to the respective destination. Here, this is like a red carpet. The moment there is an agreement between India and China, as per this trade agreement policy, which is subject to this AEO scheme, AEO is where the exporter, on the basis of their capacity, exporter on the basis of their turnover, will be given a star status. They'll be given a star status. This star status entitles them to have free flow of business between across the nations. I can import the goods, I can export the goods. I have less permissions, I have less nomenclations. Also, like one of the advantages, you have your self-regulation. That is to say, in terms of declaration, in terms of certificate in relation to country of origin, in relation to quality norms, in relation to warehouse regulations. So there are various aspects which are required for a business. I'll give an example. So let's take example of Ranbaxy. Now, Ranbaxy is importing some chemical drugs which are relevant for their R&D purpose. At the same time, let us assume that there is a small-time businessman who's called as, say, Dhanush Engineering. Now, Dhanush Engineering is importing a particular chemical which is to be used in a manufacturing process, say for a particular activity. Now, Ranbaxy is importing a particular consignment which is 1,000 times bigger compared to Dhanush Engineering. Now, Dhanush Engineering, he will fill the papers, he will give the respective documents for examination. There will be a survey here, there will be examination, there will be appraisal, there will be assessment and payment of duty, and then goods will be cleared. Now, in this process, there are certain time lags, certain delays, etc., where I have to go file an application, wait for the inspection, wait for the customs officer. A lot of procedural aspects are there. In case of Ranbaxy, if they have this AEO scheme, as of now, if you ask me, so what is the status for Ranbaxy? It's a 5-star status, where Ranbaxy will say, my dear officer, they intimate to the customs, look, I'm getting so-and-so consignment, which is meant for so-and-so thing. So these are the documents I'm uploading online in electronic. The moment the consignment comes, it will be on a self-certification. It comes to the port. From the port, directly it is unloaded to the vehicles. From there, it goes to the factory. So here, payment of customs duty. They don't pay customs duty upfront. The goods reach the factory, maybe after a fortnight, the customs duty is paid. In case of Dhanush Engineering, self-assessment, payment of customs duty, then goods are released for domestic tariff. Here, I have a permission to take directly to my factory with a lesser paperwork. So these are the trade regulations which are done by Industry and Commerce. Now, Ministry of Finance is just making a policy decision in the sense how much tax to be collected, how much duty need to be collected. So they're not bothered. Are you a big player or are you a small player? They say, look, these are the exemptions, these are the notifications, these are the circulars, and these are the procedures involved. In relation to trade matters, Ministry of Industry and Commerce, they come and they explain what all trade facilitations, trade measures they have come with to ease the business, which is called as the ease of doing business. Like example, so I have exported the goods. I need to have money released in foreign currency. I don't know how many of you have done this audit for company where Money earned in foreign currency. Money earned in foreign currency, which is permissible to be kept in EEFC account, exchange earners foreign currency account. Like another entity where money is not permissible. Money is not permissible in EEFC. So here, there are some regulations from Reserve Bank of India. There are certain regulations from Ministry of Trade Commerce. So here, the exporter who imports and who exports, now it is a day-to-day activity. I import a consignment worth say 3.5 lakh USD. I export a consignment worth 5 lakh USD. The money which has come to me in foreign currency, I park in EFC. I again use it for settlement for my import payments. So here, converting that into mandatory INR may not take place. So these are another trade facilitation aspects where we have something called what do you call that, BRC, Bank Realization Certificate. These days we call EBRC, which is also called as a FARC, Foreign Inward Remittance Certificate. Now, if you would have examined carefully provisions under GST law, section 54, read with rule 89, wherein I, as a registered person, if I have exported the goods, if I have exported the services, I have to ensure that the money is received in convertible foreign currency. And the proof for that is this EBRC or FARC. Now, earlier, we used to go to the banker, file an application, get this manual FARC. Now, what we are doing, just sitting at my desk, I just log into my DGFT website. I say these are the goods exported and this is the money released, where the banker is automatically issuing this EBRC on the basis of details furnished by me. I have an export invoice, I have a packing list, I have my shipping bill details. Connecting these three, automatically EBRC is issued. Similarly, it is for software industry. So these are the trade measures where there is a difference between my Ministry of Finance and my Ministry of Commerce and Industry. Ministry of Commerce and Industry, their focus is only on trade regulation. My responsibility of Ministry of Finance is only in relation to collection of taxes and giving exemptions on the basis of need of the end user. So this is a thin line of difference where we start reading this particular act called Foreign Trade Policy. Foreign Trade Policy. Now, let me come to your institute material where all this information is elaboratively they explain what is that we have to understand from foreign trade policy. Open your institute material. This is module number 8, foreign trade policy. Students, there are now preamble before we start with this particular chapter. So examination point of view, what do you expect us to read? My suggestion is, from your examination point of view, you would be tested for MCQ on various schemes or trade measures. Where, let me give one example. So there is one entry called DEL, Denied Entry List. This particular denied entry list is a mechanism where a particular importer who have obtained a particular scheme of duty-free imports where he has not met with the export obligation, or there are certain conditions like when goods have been imported, the goods have to be used by the same importer. They should not be permitted to be transferred to another person. So if there is a violation, that particular importer, based on the IEC, they'll be parked in this list called this denied entry list. Now, what is the purpose of this? They block the benefits, they block this particular IEC for various trade facilitation measures. So this is one of the definition, examination, they'll test you. The purpose of DEL is to unblock, say, importer or exporter like ABCD in relation to delay in payment of customs duty, in relation to non-compliance with any foreign trade policy related compliances. Person who has defaulted in paying income tax, none of the above. They would be testing you MCQ on couple of trade measures which are there in this particular policy. Maybe 2 into 2, 4 marks. We can expect 2 into 2, 4 marks MCQ. Or they would be asking a theory question on the incentive or the schemes available with relevant terms and conditions. Like example, explain the difference between advance authorization versus duty-free import authorization. Or they'll give an example. Mr. X, who happens to be an individual, whose last 3 years aggregate turnover is say 2 million US dollar. He is under say 1-star status registration. Examine the benefits available to this particular X. Also, examine if Mr. X has imported this particular machine, particular goods under advance authorization. What are the export obligation to be met with? So they will ask you overall a case study on the basis of a particular scheme. These are the extreme theory questions which would be asked. If you ask me, so can we skip this as a optional thing? I would say you can. It is your call, this is a very small chapter with hardly say 30 to 35 pages. Like entire chapter is up to 57 pages, where there are 4 topics which is very interesting and very important, which we need to study. Like as I take you through, I'll make you to understand how do you remember these particular provisions, where it will be very easy to score from examination point of view. In case of customs law, I have to solve a particular problem. Like I need to remember how do you calculate safeguard duty? How do I calculate IGST? How do I apply this exemption notification? Various aspects are there. In this case, if I know a particular scheme, I can easily answer that particular scheme. I can score 4 marks. Now, beyond examination, from career point of view, there are multiple schemes available which post qualification, once you become a chartered accountant, you join a company as a general manager, assistant general manager, or if you get into practice, these schemes will definitely fetch you a saving of 10 to 12%, to your P&L. So when there is a saving of 10 to 12%, always management will say, yeah, you have done a good job. All these days we were losing the benefits which are there under foreign trade policy because we are not aware. So one thing, getting this awareness, it will be putting you into a better edge in terms of a practitioner. So this is one advantage from this particular chapter. So this is a preamble, how we will study, what we will study from this particular chapter. Starting with foreign trade policy, we will understand the framework of foreign trade policy, which I have explained a while ago. Salient features of foreign trade policy, examination, expect 4 marks theory question. What are the salient features of foreign trade policy? Then contents of foreign trade policy, just for understanding purpose, other related provisions. These provisions which would be tested as a theory question for your footful down. Appreciate and explain the basic concept relating to import and export of goods under foreign trade policy. Now, this is your regulation. Where there is a reference to SION. Also, there is one important reference which is called as a SCOMET. SCOMET. We call this as special chemicals, organisms, materials, equipments, and technology. Now, this particular SCOMET is one area where the customs authority is going to rely upon the regulations and norms which are fixed by the foreign trade DGFT authorities. And one more aspect called standard input-output norms. Now, earlier, we also used to have one particular topic called duty drawback, which is under customs law, which is called general industry rate or special brand rate. General industry rate, then special brand rate. We are not studying this in your new syllabus. This particular duty drawback is fixed on the basis of SION. SION is your standard input-output norms. Now, I'll give you a little background of this SION before we get into this particular topic. Let me just come to my presentation. Quite interesting. Now, if you ask, sir, we are learning as a theory. What else is there for us to learn? Being a chartered accountant, classic example before us is our Honorable Minister Piyush Goyal, who happens to be an alumni of the chartered accountancy. He happens to be a chartered accountant and he's heading this particular ministry. We get an extra urge in terms of understanding the taxation matters, also in relation to industry policy related matters. This topic of SION is one of the interesting topic from erstwhile central excise provision, central excise provisions, where a manufacturer or a processor have to approach a committee with the inputs which are used, with the catalyst and process required for manufacturing or processing the output, which is the finished product. So here there is a committee. This committee is going to fix on the basis of your CTH, customs tariff classification. We call CTH, customs tariff heading. On the basis of your CTH, they examine each of your industry and they say, what is the percentage of inputs? What is the percentage of inputs which are there in your output, which is manufactured? So how does it help? This particular process is going to help the particular DGFT authorities to allow inputs or consumables or capital goods without payment of duty. Without payment of duty. So here, Department of Ministry of Finance. Now, sitting in Ministry of Finance, I'm not a technical person. I'm not a technical person on engineering side. What I do, I say that for this particular commodity, this is my customs duty. And for accepting your transaction value, I examine section 14. I'll examine relevant valuation rules. This is my job as the customs officer, as a proper officer. But as a DGFT officer, what will I do? I'm a technical person from your commerce side. I'm a technical person from engineering side. I'm also a technical person from science background, where I examine your business process. For given your business aspect, I'll fix something called fixation of stand. Fixation of SION. This fixation of SION will help me in terms of permitting the goods which are relevant for import without payment of customs duty. Also for drawback related aspects, in the sense, how much is the element of customs duty suffered on in your inputs, which is consisting in your finished goods. So when I say inputs, now these inputs could be procured from domestic tariff area, could be imported. What is a dependency? What is a dependency on domestic tariff area? What is a dependency on imported goods? for the goods which are manufactured and exported. Now, this entire fulcrum is going to help me to determine what is my duty-free imports permissible. Now, this is from my DGFT point of view. Under erstwhile central excise point of view, I was allowed to avail input tax credit. My availment of input tax credit is on the basis of this CON, and this is going to help me to understand what is a normal loss, what is my abnormal loss. Now, if there is a normal loss, this is not going to vitiate the input tax credit. If there is an abnormal loss, so much of your input tax credit availed on that particular inputs is to be disallowed. So how do I get this particular normal loss, abnormal loss? Now you refer your financial statements. A manufacturing company which files their financial statements, there is a table in relation to your business process. Under your business vertical, where I would say the quantum of inputs consumed, the quantum of finished products manufactured. So I give a statistical data, units consumed, units produced. Now, units consumed, units produced is a statistical information which gives me an overall view, how much is a normal, how much is abnormal. And is this prescribed as per your SAON norms, CON norms. And this particular committee, which is heading this CON, is a core technical committee. I would say they're like Brahma. Why I say they're like Brahma? You visualize, the assessee comes with a paperwork saying that, so this is my industry, this is my machinery, these are the process I undertake. So you should have a experience. You should have worked in the industry. You should be a chartered accountant. You should know how to read financial statements. You should know how to read the cost statement. You should also know how to do this math of what is the percentage of imports, what is the percentage of domestic tariff procurement, what is the value addition, what is the final output, how do I calculate your value addition, and how do I satisfy this element of input tax and benefit taken, input tax benefit not taken. And how does the benefit of there is something called loading of duty on your inputs. All these are the elements which are examined to give a benefit for various products. And the benefits are fixed on the basis of your customs tariff heading. Now, this is a small background which is connected with standard input-output norms, CON. Coming back, analyze the basic concepts relating to export promotion, schemes provided under foreign trade policy, duty exemption, remission schemes, ROTTEP, EPCG scheme, EOU, EHTP, BTP. So examination, this one small topic, you can expect one particular theory question where they'll ask you. Explain the relevant compliances under EPCG for average export obligation. AEO, average export obligation. Specific export obligation. So they have certain export obligations to be made under EPCG scheme. Probably one theory question for 4 marks. Or benefits available to EOU, EHTP, STP, BTP. Your export-oriented unit, export hardware technology park, software technology park, business technology park. These are the various schemes which are considered to be your deemed exports under foreign trade policy. Now, deemed exports, section 147 of GST law has dealt separately. This section 147 is borrowed from the provisions of foreign trade policy. There's one small paragraph which differentiates what do you mean by deemed exports under foreign trade policy, what do you mean by deemed exports under DGFT. This is a macro overview which I've explained all along. Yeah. Now, my foreign trade policy, right now, we are going to study in your examination, my foreign trade policy 2023, which is updated as on today. If you see my foreign trade policy 2015, Foreign Trade Policy 2020 and Foreign Policy 2023. Generally, my foreign trade policy is framed for 5 years. Every 5 years, my foreign trade policy is updated. So earlier we had 2015 foreign trade policy, which continued till 2020. 2020, there were few major changes were done, but year on year, this foreign trade policy was getting amended. Instead of 2025, we had 2023, which came in between. As of today, we are going to study foreign trade policy 2023. And this particular foreign trade 2023 is notified by the central government under the provisions of Foreign Trade Development and Regulation Act 1990, FTDR 1992. Like we had Ministry of Finance, we had Customs Act, we had Customs Trade Act, Tariff Act, we had Foreign Trade Development and Regulation Act 1992. Under the aegis of this act, we had this foreign trade policy regulation. And this particular Foreign Trade Development Regulation Act is empowered for what? Provisions relating to facilitating and controlling foreign trade. Provisions for facilitating. When I say facilitating, please keep in mind my Minister of Finance, my Minister of Commerce and Industry. They have two different objectives. Facilitating. So what do you like? No, they ask as an industry, what do you want? Like example, most of you have heard of this Punjab and Haryana Department of Trade and Commerce Industry, PhD. We call PhD. This is a trade and commerce body. Trade and commerce body. What is this particular body doing? They have a pool of industry people who come together, who try to discuss and say, what do you want? So I need something called AEO facility. AEO facility. Take example. Say the Association of Coffee Manufacturers, the Association of Coffee Manufacturers, they come together and say, sir, we do a particular packing. If the packets are open for inspection, they lose a particular quality, and also every time when we export particular consignment, it takes 10 to 14 days for the basic procedure, the formality at this particular foreign port. What do you want us to do? So please have a dialogue with that particular foreign ministry and say that these are certain items or this particular goods need not be kept for more than one particular working day at your port for formalities. Then they'll say, why? So this is a particular commodity which is meant for consumption. This has got so and so package. If the package is open, this loses its taste. This is to be consumed in so and so time frame. So considering the business requirements, please allow with self-certification. With self-certification. So when I say self-certification, I declare the goods are so and so goods which have brought into that nation. The goods have so and so quality parameters which were agreed upon international trade. These goods are not smuggled goods. These goods are not prohibited goods. These goods are not regulated goods. These goods are free allowed goods. These goods are not being brought under a particular special incentive from the exporting country to dump into that particular nation. And also they say this is a self-certificate of origin for manufacturing purpose. So the various declarations are there. They'll say, so please give us a special privilege. Like example, very simple, crude way to understand this. When you go to airport, when you go to say railway station, now or also when you go to a temple, when an ordinary person comes, you'll stand in the queue. You'll buy the ticket. You'll stand in the queue to board the flight. Assuming a VIP comes, they need not stand in the queue. They go straight, directly get into the flight. Similarly, when we go to say a particular chief justice comes to a particular temple. Now, the people who have a particular rank, they go directly have their business or activity, they come back. So there is a normal route, there is a special route. They are trying to facilitate and control this particular trade. Prohibit, restrict, regulate. These three terms we use very quite often under DFIA, Duty Free Import Authorization, Advance Authorization. Please understand these three terms carefully. PRR, prohibit, restrict, regulate. Prohibit, I don't allow you to come into India. Restrict, I allow only a percentage of goods coming into India. Regulate, I would say that let this goods come with so-and-so declaration into India. So this activity of PRR, like your RRR, what is it? Rajmouli movie, RRR. We had this PRR. I prohibit, I restrict, I regulate. What do I do? This PRR for exports and imports in all specific cases as well as subject them to exemption. So here, as a Ministry of Commerce and Industry, Department of Commerce and Industry, they take a call how to protect the domestic industry, how to regulate export industry. For a moment, let's take example of say demethyl chloride. Now, demethyl chloride is a particular compound, is a particular substance which has a multiple purpose. Now, assuming for a moment, there is a civil riots in a particular region between two communal, the trade or religion people. One of the explosives used using this particular compound called demethyl chloride. Now, this is one of the scientific element. Now, Ministry of Commerce will say, look, there was an intelligence that this particular demethyl chloride is being imported in increased quantity, which is causing a disharmony to our civilians. Let's prohibit that. Or let us restrict that particular item. How do I restrict? Any imports which is coming from China, restrict. Don't allow that. Any imports which is coming from, say, Malaysia, restrict that. Direct route, indirect route. So my Department of Commerce and Industry is going to frame a regulation in relation to this particular components. Now, this is the information which is known to Department of Commerce and Industry. This information is parallelly given to Department of Ministry of Finance, where both these authorities bring a notification saying that this particular restriction is caused to so-and-so industry. This is my second objective of my foreign trade, development and regulation. This three terminology, PRR, prohibit, restrict, regulate, or to be read in conjunction with two other topics. Third point, my DGFT, that is foreign trade policy, is authorized to formulate and announce export-import policy, EXIM policy. We call as EXIM policy. And also amend seen from time to time by notification official gazette. Is also authorized to appoint DGFT, Director General of Foreign Trade, for the purpose of this act, including formulation and implementation of export-import policy. So the power for DGFT is originated from my Department of Trade and Regulation Act 1992. This is a backdrop for my DGFT, which comes in my foreign trade policy. You can see this particular diagram. This is an artwork created by Board of Studies. It subsumes in itself all elements of what we are going to study today's topic. There is a person called status holder. This particular status holder is regulated by authority called a regulating authority. This particular regulating authority is going to give various schemes under DGFT guidance, which is in relation to the industry registered as EOU, EHTP, STP, PDP, etc. Also, these status holders are regulated in this particular foreign trade policy. And there are few small elements which we cannot read, but overall, this one particular picture depicts entire topic of foreign trade policy, what we are going to discuss today. Let's move further. Foreign trade policy. My foreign trade policy, though it is issued by DGFT authorities, in excess of the powers conferred by Foreign Trade Development and Regulation Act 1992, Union of Ministry of Commerce and Industry, this is a Commerce and Industry, which is a Government of India, generally announce the integrated catch point, integrated foreign trade policy with certain underlying objectives. So what if there is a clash between foreign trade policy and my customs or GST provisions? Please keep in mind, regulation of tax laws is under customs and GST. This is related to foreign trade policy. In case if there is a clash, generally it is a duty of the Minister of Commerce and Industry to bring a harmony, to bring a integration of these policies in line with tax regulations. So here, this authority has a specific objective, and this authority has a broader objective. One of them is tax incentive, and entire our restriction of this particular syllabus, we're just reading about incentive. Beyond that, the trade measures, it is not there in our syllabus. Reason, they wanted you to just understand the tip of the iceberg. Once you get qualified, you can read in depth this particular policy. Salient features of foreign trade rules. Examination. This is one hot favorite topic. 1990s and 2000, we used to have this particular question tested once in 2 attempts. Briefly explain the policies of salient features of foreign trade policy or exim policy. Erstwhile, we used to call this as exim policy. Following are some of the attributes of foreign trade policy. Point number 1. Export, import of goods and services generally free, unless specifically regulated by the provisions of policy or any other law for time being in force. Remember this PRR: prohibit, restrict, regulate. So they say that my export and import of goods and services, the term they have used is goods and services. When you read this particular terminology, I'll give an example. So how does this foreign trade policy regulate services? Let's imagine for a moment technology. Technology, which is in relation to defense, programming or coding. There's a separate programming, there is a separate frequency which is used by defense. Most of you would have seen these movies where there is a radio frequency used for communication purpose. Like one of, say, our Indian Army person, they go for a particular mission, they get, they fail to come back because of some reasons. However, they have this walkie-talkie kind of thing. Using a particular frequency, they exchange the communication through coding aspects. Now, regulation of services. Those software, those technology, which is in relation to, say, defense, is also regulated under my foreign trade policy. So here, the objective is not just like what you see, what you understand. It is at a bigger level where they try to look at the nation as such, how to make India Atmanirbhar. It is self-sufficient, self-driven, and self-resilient for its sustainability. So here, first and foremost, unless regulated, it is generally free. Point number 2. Export and import of goods are broadly categorized as free, restricted, prohibited. That is your PRR. Free, I restrict, I prohibit. The same point elaborated in a detailed manner. Some goods are free for import and export, but can be imported or exported only through state trade enterprises. Now, this is a government or notified agency. For a moment, to understand state trade enterprise. Let's take example. Say what I can give pulses. Let's take example of pulses. Let's read this line and understand. Some goods are free for import and export, but can be imported or exported only through state trading enterprise. As the name goes, trading enterprise. So what is the objective of this state trading enterprise? I'll give a corollary example to understand this state trading enterprises. Data. Data is the hunch point for anyone to take a policy or decision. For a moment, the Ministry of Finance wants to understand how the taxes are being collected. Take the COVID point in time. During COVID, there is a less competition of human beings. Most of us are restricted to our homes. Now, when we are working from home, now this TDS under contract, TDS under commission, TDS under your advertisement. Probably, advertisement is one thing which was booming left and right because digital media, all physical advertisement, your hoardings, etc., have come down. Digital advertisement came into picture. Contracts, housekeeping, security, etc. There's a less of revenue on account of TDS under 194C. When you look at your tax from security transaction tax, assume for a moment till March 2020, my security transaction tax per month was say 20 crores. All of a sudden from April 2020, the 20 crores has become 200 crores. Now, how did that security transaction tax went up to 200 crores? Everyone was showing interest in trading sitting at home. COVID is a point in time. Most of the people were collecting, doing the business which is on stock market. Why? That is one primary source of revenue in addition to the people who have lost their livelihood. Now, I'm talking about data. Now, government needs this information to regulate the taxes, to regulate the industry. Something like that is your state trading enterprises. The government wants to understand how much is the stock of paddy we have, how much is the stock of sugar we have, how much is the stock of onion we have. Assuming that there's a war which is going on between Russia and Ukraine. Now, as a ministry, we need to have some strategy to protect our interests. Now, when there is a war which is going on, there is impact on my infrastructure. There's an impact on my oil imports. There's an impact on my infrastructure facilities. Also, the goods which are imported from Ukraine, the goods which are imported from Russia may be impaired. So, likewise, the state trading enterprises is an entity where the trading of pulses or import and export is routed only through this particular body for control point of view. So, state trading enterprise could be a government authority or could be a notified agency. One example, other than pulses, is say your precious stone. Precious stone. That is your jewelry, diamond business. So they wanted to understand how the industry is performing. So they want to monitor that particular line using this state trade enterprises. This is another salient features of foreign trade policy. Depending on the need of information, they say these set of goods which is meant for import export should only be routed through state trade enterprises. When I deal with one example of advanced authorization, I explain how this state trade enterprises comes into picture for advanced authorization. So here, just to give an example, say there is one entity called ABC State Trade Enterprise, which is dealing with coir, Now, assuming that XYZ Limited wanted to export this particular coir, what XYZ Limited will do? They sell to this ABC STE ABCST in turn is going to do actual export. So I, as an exporter or I as an importer, will depend on this particular STE for the purpose of that particular trade agreement. This is my very interesting aspect, which is like that DGFT. Now, as we read through, the underlying concept is like, when we read these topics, when you read these topics, read such a fashion that how you will enlighten your knowledge, how you are going to use this particular knowledge once you join a company. You can have the trade secrets, you can have these strategies implemented in your business, which is also going to help you as a monitoring person at the helm of affairs. So as a managerial person, whatever policy decisions are being regulated here could be parallelly borrowed into your business as a strategy making. Coming back to the next point. There are restrictions on exports and imports for various strategic, health, defense, environment, other reasons. If the goods are restricted for import or export but not prohibited, restricted but not prohibited. Look at the language. Restricted but not prohibited. Government can give a permission or license for specific reasons. Permission or license for specific reasons. Example. Import of rubber. Import of used plant and machinery. Import of electronic devices. When I say import of rubber, now this import of rubber is going to create a lot of unhealthy competition to the domestic players. Let's take example of MRF C8. MRF C8, they manufacture from the indigenous rubber which is consumed. I have one another player who imports a cheap rubber. When I say cheap rubber, it is of a degraded quality. I make a tire which is half of the price which is charged by MRF or C8. Now what happens there? It's a threat to the industry. So they restrict a particular but not prohibit a particular good. Similarly, usage of plant and machinery. Use plant and machinery. Assume for a moment XYZ Inc. XYZ Limited. XYZ Inc. is a parent company in China. XYZ Limited company is a subsidiary in India. There is a plant and machinery which is used by this particular entity for a period of 15 years. And this particular plant and machinery is dumped into India. I use a term called dump, which is used for another 2 to 3 years. After 2 to 3 years, this is going to be scrapped in India. And indirectly, cost of new plant and machinery is taken by this entity, Now, what is happening? Indirectly, the profits are being plowed back to the parent company using the machinery which has got a shelf life of 2 to 3 years for a price of new machinery. Now, this is called dumping of a machinery into industry. So here they formulate a particular regulation in this particular scenario. There's a person called chartered engineer. The policy matters, they say, whenever you're importing a machinery. Now, these topics, whatever I'm explaining you would never come across in your audit. For the simple reason, our core competency is in financial audit, is in tax audit, also audit. So what we do, we prepare financial statements, we apply auditing standards, we apply accounting standards and just restrict our focus. Now, when you go one layer beneath the transaction, say imports. When a machinery has to be imported, ask the client, sir, can you give me a checklist what all documents you have furnished to the proper officer when the machinery was imported. Like one of the document which would be called by the proper officer is your chartered engineer certificate. Chartered engineer certificate. And if the life of that machinery is less than 85%, they straight away deny, saying that, look, this machinery is coming as a used condition, and the life of this machinery is less than 85%. We're not going to allow this particular machinery into India. Also, the money which is paid, this is not worth for it. There's one movie, on OTT which has come. This is in relation to the stamp paper. I don't remember the name of this OTT. Telgi scam, where we would see this particular examples where machineries are used over a point in time, they discard that particular machinery. And the way they discard is not as a whole. They discard one particular machinery one point in time, the another machinery at a later point in time. Reason, no one should use this particular machinery for printing currency or printing the stamp paper per se. Now, this is one another technique where regulation is happening, restriction is happening. There is no prohibition, but they say I restrict. Now, I gave one example called used plant and machinery. Third example, electronic device. Always electronic devices is regulated and restricted. I use the term restricted. There is no prohibition, but there is a restriction. And most of you, if you have to remember, during November 2023, one big move made by Ministry of Commerce and Industry. November 2023. This is a landmark move made by Ministry of Commerce and Industry. They say there's a license, there is a regulation for electronic goods which needs to be imported. Any software company, any company which imports electronic devices, I give a license, I give a permission. Unless you have a permission, you're not supposed to import any machineries. Now that means to say, there's a silicon dump which is getting dumped into India. So the ministry have decided very, very thought-provoking way, saying that it's going to be a license. Means what machinery you're going to import and what quantum you're going to import. All along, you're free. Like example, Wipro have they have a policy that every 3 years, I'm going to change my laptop. For a moment, Wipro is going to import, say, 10,000 laptops. Now, what happens to the existing laptops? They are going to get scrapped. Now, Ministry of Commerce and Industry have thought about it and saying, look, we're going to give a license. Don't import, rather purchase domestically. We want to be Atmanirbhar. So, we will give only this particular license based on the need, based on the demand. Unless you prove, we are not going to let you to import freely. So one of them is electronic devices. Again, this is not a prohibited. This is a restricted item. Now, this is one of the important salient feature under DGFT. Students, I'm going in very, very slow and detailed manner. Reason, these topics you will not see. For me, if I explain, I can just explain this and as a theory and I can go. But I'm going in practicality to make you understand how the policy is framed and how you need to understand this particular topic once you get qualified, where you want to specialize in this particular area. Also, it is going to help you to adopt this learning in the industry wherever you're going to work upon. How to frame these policies for the development of that particular organization. Moving further. Exports are promoted through various promotional schemes. Exports are promoted. I want to promote through promotional scheme. Like example, agriculture. Now, how do I promote my agriculture? I have a district of nodal officer. District nodal officer. Where the Ministry of Commerce and Industry are going to understand where is the potential for a particular agriculture produce. And this particular agriculture produce to have its identity in the international market. Let me identify that source. Let me develop that particular district. Let me understand from them what facility, trade measures are required. Like example, so we need power continuously for 16 hours. So we need road infrastructure. So we need access to ports. So we need access to airport. So we need some incentive for us to do this particular cultivation. Now these trade promotional schemes are made through this district nodal office. This is going to be discussed somewhere in our going further topics. And this is one again salient features of my foreign trade policy. Goods and services to be exported but not taxes. This is a landmark statement from World Trade Organization, World Customs Organization. World Customs Organization believes and makes a practice as an international trade. As part of international trade practice, they say goods and services to be exported, but not the taxes, How do you achieve this particular mantra? They say any indirect taxes on exports are either exempted or refunded. Those taxes are exempted. Sir, how do you exempt? I exempt on imports. This is exempted or refunded. So how do you refund? Using duty drawback, or using RODTPE measures. Refunded of both outputs and inputs through application of various schemes in the form of duty exemption, duty refund, drawback, rebate, as the case may be. Now, this is the important, interesting topic where you make your profession, you make your career promising is one of the area where we study the scheme called EPCG, we study the scheme called Advanced Authorization, Duty-Free Import Authorization, etc. Also, in addition to this, you have SAZ registration, EOU license, foreign your software technology park. These are various schemes which are formulated. Capital goods can be imported at nil rate of duty for the purpose of exports under EPCG scheme. Now, these are some of the salient features which are there under my foreign trade policy. Moving further, for units undertaking to export all their production, there are special schemes so that they can avoid taxes at every stage under the scheme of EOU. In certain specified cases, imports get duty exemption, concession, remission for certain special purpose. In such cases, to enable domestic supply to compete with the international trade. Now, these 2 points are continuation of the previous point, what we have studied. Overall, these are certain salient features under foreign trade policy. Now, how does this foreign trade policies regulate? Let me see any doubts before we go further. Okay. There's one question from Marshall. Sir, duty drawback, MEAS, RODTP, if same, why they have given different names? Harshit, hope you have understood, ma? My duty drawback is under customs law. RODTP is under foreign trade policy. So incentive is given by the customs authority, which is a measure of my customs duty paid. Incentive, top of what is given, like now foreign trade policy is like incentive. Like how do I say this? Let's take our own profession. If I get more than 60 marks, I get an exemption. Assuming I gave both the groups, unfortunately, God forbidden, one group, I couldn't clear one paper, the rest 3 papers, I got 60 plus. That's an exemption given by CA Institute. Now, similarly, now assuming that I've cleared my CA altogether based on my CA degree when I have to do my master's degree or my bachelor's degree. My bachelor's degree, which is given by, say, UGC or AICTE, UGC or AICTE, which are under another ministry, Department of Education, Ministry of Education, they say your qualification of chartered accountancy is recognized at par with, say, your bachelor's degree or master's degree. So if there is any higher education where a bachelor's degree is required, as a student of chartered accountancy course, I have done my CA. I did my foundation, I did CA inter, I did my CA final, but I have not done my BCom or BSc or bachelor's degree. Then UGC says, I recognize that CA is equivalent to a bachelor's degree. So when you want to do your master's or when you wanted to do your research, this CA degree is recognized as an additional qualification. Something like is your duty drawback, which is under customs law, my MEAS, SAS, RODTP under foreign trade policy. I get an incentive, I get additional recognition to train as a trade facilitation matter more than what is there in my customs law. So that's the reason I have these two aspects travel in line, compensating or supporting each other. I don't say because you're enjoying drawback, I'll not give you benefit of RODTP. I don't give you benefit of advance authorization. There is no restriction as such. And a very good point. Like Harshit, you're little ahead of my discussion, but your understanding is in practically, like why customs law is given this benefit, why foreign trade policy is given this benefit. Hope I have clarified this point. Then one more down. Harshit is asking this question. Sir, in denaturing goods, if someone imported huge quantity of goods, whether customs authorities will check and mix material? If so, machinery is also required mixed these denaturing goods. Okay. The process of denaturing is done in the presence of customs. I repeat, my import-export is under the administrative jurisdiction of customs authorities. So here, any goods which are brought into India, which have got multiple purpose, this activity of denaturing is done in the presence of customs authorities. This is not done by anyone else. Mansa says, Shri Rajesh Kumar Singh, Secretary DPIIT, said that we need to move lower customs duty regime to integrate with global chains. A good noting, na? Yes. Now this is where I integrate our customs trade measures with other trade measures. So this particular aspect of trade measures, like sir, there is a customs duty at the rate of say 12% for a particular say thread and nylon in this particular country. The same nylon thread in India is subjected 18%. So in Germany, in Singapore, in Spain, this is 12%, but you're charging 18%. Our products are lesser competitive in the international trade. So that's how my foreign trade policy is also amended. Namrata, don't worry about DEL. I just lifted a particular trade measure which is there in your foreign trade policy, which is denying a particular IEC holder in a particular trade measure. I'll come in detail at a particular point in time. What do you mean by DEL? Why we read this particular DEL? Mansa, you have given a couple of running notes. Namrata, you also have given some running notes, ma. It's all corollary to what examples I'm giving. Your appreciation of the policies with other subjects is good. Mandatory testing before exporting cough syrup, is it a part of foreign trade policy? Mansa, your question is supplementing Harshit question. Now, benefit of other students, I'm reading Mansa's question. So mandatory testing before exporting cough syrup. Is it a job? Is it part of foreign trade policy or is it part of customs? Now, please remember, Ministry of Commerce and Industry. It is a trade facilitating body. Means they formulate policy matters. But administrative aspects, when I say administrative aspects, goods to be imported, goods to be duty to be paid, goods tested for testing, allowed for testing, goods examination. All these are under the control and jurisdiction of Ministry of Finance. My Ministry of Commerce and Industry is a body who stands aside. Look, I'm going to be like a brother. Ministry of Finance does all regulatory aspects, all procedural aspects. I want to import the goods, get the proper officer, customs officer permission. I need to export the goods, get the proper officer, customs permission. So, as a trade body, it is very practically difficult for me to go every time to meet the customs officer. Now, what I have done, I approached my Ministry of Commerce and Industry. I asked, to give example, Mansa. Let us say there is a drug manufacturer. This drug manufacturer says, sir, every time I have to go to the customs authority, I have to prove them this is a tariff classification and this is an exemption notification, and let me permit to export the goods. It is a time-consuming matter. Now, because my custodian of imports and exports is with Ministry of Finance, I approach Ministry of Industry and Commerce. I'll say, so do one thing. You have a regional authority. Let this regional authority be a supervising authority who can give a clearance, who can give a certificate. And you get in dialogue with this particular Minister of Finance to have a free flow of my goods. So here, my Minister of Trade and Commerce have a dialogue, will formulate a policy, which will also be in conjunction, in acceptance with Minister of Finance, where they both, as brothers, they decide and say, okay, if there is a special permission given under Ministry of Commerce and Industry, once you have an export star status under customs, customs portal, you have a star status. If you have so-and-so status, under Ministry of Commerce and Industry, I'll give this particular trade measures. So they complement each other. A recommendation of Ministry of Commerce and Industry comes and acceptance happens to Ministry of Finance. So here, in relation to the concept of what you're talking, it's all regulated through Ministry of Finance. Your Commerce and C&I is just complementing the requirement of trade requirement. And Namrata, I think you're referring to that Telgi scam, which is that 1992 movie. Yes, ma'am. It's connected with that stamp paper scam. Good. Hope you are enjoying reading this topic, ma'am. Otherwise, it's a dry topic. If I don't explain so in detail with the practical examples, it's a very dry topic. I mean, you get bored reading this particular paper. But honestly, there's nothing like bored topic. It all depends on how we create interest and how do we find essence of this particular topic for us to read. Moving further, administration of the foreign trade policy. My foreign trade policy is formulated, controlled, supervised by the officer of DGFT. So this administration is under the power of DGFT. This is an office attached with Ministry of Commerce and Industry, Government of India. DGFT has several offices in various parts of the country which work on the basis of policy formed by the headquarters in Delhi. So here I have the ministry. This ministry have appointed DGFT, which is based in Delhi. This DGFT, through various nodal offices like RA, at various states, various districts, they implement this policy. Right? This is how my mechanism works under foreign trade policy. DGFT issues as an authorization, which is also called license, trade license. Like example, shops and establishment license, uh, profession tax, again that's a license, food and drug control license, pollution control license, your vehicle fitment license. Like we have various licenses with various authorities. I also have a authorization, technical name authorization. This authorization is like a license. So what will I do with this license? As IEC holder, I get a license which is having a number, This license or this number, I would be quoting on my bill of entry or shipping bill. Based on this particular mechanism, based on this particular license, I get a exemption from customs duty, or I get my MEIS or script, which is called duty script, which can be used for further payment of customs duty. Now, this particular license is nothing but like a trade license, where on my ICEGate portal, this is called ICEGate, which is customs portal. ICEGate customs portal, where the license given by DGFT. Look at this. It's like brother and sister or brother and brother. ICEGate is one portal, DGFT is another portal. So my license given under DGFT portal gets recognized, gets identified. Now there should be a integration of data. Look at the beauty. My GST portal is integrated with ICEGate portal. My ICEGate portal is integrated with DGFT portal. So here, based on PAN under income tax, I have a GST number. I have IEC number. This is again interlinked with my GST number. Income tax with GST, GST with customs, with DGFT. There is a free flow of information, one office to the another office. Now, when you, as a qualified chartered accountant, you go to, say, income tax assessment. The assessing officer, who happens to be international, your transfer pricing officer, the transfer pricing officer pulling, he pulls the data using your IEC. He says, look, there is a 60% increase of your imports compared to the last year. Why is it so? Please explain. Look at the data migrating from customs portal to the income tax portal. Similarly, you have so much of purchase, TDS credits. On the basis of TDS credits, there is information flown to GST department saying that so much of income has been declared as professional income. Why you have not paid GST on so much of turnover? Similarly, the DGFT authorities, they need information from both income tax, indirect tax, and customs for giving incentive as your duty script. Now, these are all integrated data which is facilitated between various authorities. Now we just read, we file returns, we just get the incentive. But when you read at a macro level, how the data is flowing, how the concerned officer is reading your information and formulating the decision for regulation of trade. This is something which is important to understand. My DGFT issues this authorization, which is called license for import export. So I can code this particular license for my bill of entry or my shipping bill. Authorization means a permission in terms of FTDR, Foreign Trade Department regulation, to import export, which is applicable only for specified goods. So I identify, and on the basis of identification, I get this particular benefit. It also grants IEC number. Now, like PAN, IEC is regulated by DGFT. IEC is regulated by DGFT. Interview question. Once you qualified your CA, you have gone to, say, one of the multinational company. They've asked, who is the controlling authority for import and export? Is it customs? Is it DGFT? Is it GST? Is it your income tax? Looks like a silly question. But the multinational company, which is having 10,000 crores turnover, they want that professional who knows in between the lines how each of the data is monitored. So IEC is a code which is regulated by the DGFT authorities for imports and exports. Import and export without IEC, imports and exports without IEC is not permitted unless specifically exempted. Now, examination. This line itself could be tested for 4 marks. Now, this is your CA final. Mr. X, who happens to be a software employee, has imported a Dell laptop. The customs officer have restricted this particular import because Mr. X does not have IEC. Examine the provisions, administrative provisions under DGFT. Now here, this DGFT is a trade measure which is in relation to exporter-importer, which is for trade purpose. Now, Mr. X is importing this for personal purpose. Now, personal goods, we already studied in the previous session in relation to baggage. There was a notification 11 of 2004 where my baggage is allowed duty-free without payment of customs duty under the customs law. So here, IEC is no way connected with my import of laptop. Now you have to connect DGFT provisions. You have to connect for trade measures, which is given for foreign trade, which is meant for personal use, which is regulated under baggage rules. All these are the topics read together. I read your DGFT provisions. I also read my customs provisions for understanding how I give my answer. So here, IEC is for trade measure for import and export, not meant for personal use. Specially exempted, probably on the basis of need of a particular industry, on the basis of industry. Example, rubber manufacturer. Assuming there is an agriculturist, they don't want to get into the gamut of getting IEC, getting this permissions and all. But there's a potential for rubber in a particular industry. So the ministry as a whole, they decide. We see that most of the agriculturists who are into this business, let us give an exemption so that the larger benefit goes to the agriculturists rather than the middlemen who are called the middlemen brokers or commission agents. Decision of DGFT is final and binding in respect of interpretation of policy or provision in handbook procedures. Now, there is something called HBP, Handbook of Procedures. This is like a rules. Like we have customs valuation rules, GST rules, we have handbook of procedures. Appendices and Ayat Niryat forms. We call this as ANF forms. Ayat Niryat forms, like import export regulation. So as the name Hindi translation, Ayat Niryat forms. For import and export, various activities are regulated through a form, like your GST-1, GST, like DIC-03, or you have RFD-01, RFD-06, your MV-06, various forms under GST. Similarly, you have your 24Q, 26Q, 27EQ, various forms under income tax. My forms under DGFT is covered under ANF. Classification of any item for import-export on the basis of ITC. Policy interpretation of committee may be constituted to aid, advise DGFT. This one paragraph gives the gamut of entire administrative picture how DGFT is being regulated. Right? Students, we are at 7:34. Let's have a 10 minutes break. 7:35. Let's resume back at 7:45. Let's have a 10 minutes break now. Let us continue with our discussion. There's two questions from Namrata. I'll just take those two questions and we'll continue with our discussion. Namrata is asking, sir, why taxes are not exported? To answer this, Namrata, any country, they say, you export your goods. I don't want your taxes to be exported. Why should my country take the burden of your country's taxes? Exceptions, there are only few exceptions as per World Customs Organization practice. To protect the interest of nation, few items can be subjected to export duty. But generally, let your export goods not to be burdened. Let your export goods not to be burdened with the duties and taxes levied in your country. So let the goods travel from your country to my country without the burden of taxes. Now, how do you ensure that the burden of taxes are not there? Where? Look at your GST law, section 54. Export of goods with payment of duty. Export of services with payment of duty. Export of goods and services without payment of duty. Now, when I say with payment of duty, with payment of GST, I get a refund of my tax paid on my purchases. Now, what is happening there? The burden of my purchase tax, is given back to you as a refund when you export with payment of GST. Refund of accumulated input tax credit, section 54. Now, what is government doing? Government is giving back your burden of purchase tax. In addition to this, Customs Authority says, look, if there is an element of purchases where you have paid customs duty, I'll give back that by element of duty drawback. Now, what the particular country is doing is, let the goods be exported freely. The burden of your purchases, look at your previous class example. I explained one small topic called refund. Under refund, I explained a topic called unjust enrichment. Now, when you look at your costing, the duties and taxes paid, if it is made part and parcel of your costing, that is your inventory valuation, obviously the value addition, that is a profit, will be on that particular duties and taxes. And that burden is going to be exported back. So the World Customs Organization saying, you have your trade measures, you have your trade practices, such a manner that the burden of the duties and taxes on your purchases shall not be exported out of India. This is one measure why customs authorities have brought this trade norm that let the goods be exported but not taxes. This is the first point. Second, Namrata is asking, sir, can you please repeat Ministry of Finance and Ministry of Industry and Commerce difference? In short, very simple man. To give this example, one classic example which I gave just a while ago. My ICAI regulations, UGC regulations. ICAI regulations, UGC regulations. Now, ICAI and UGC are like two different individual government autonomous bodies which have to complement each other. Under the noble agency of Ministry of Education, I have ICAI, which conducts the examination, which frames the curriculum. Once a student passes his CA course, he or she, they are recognized to have a bachelor's degree under the UGC scheme. Now, what is happening here? My UGC is complementing the ICAI recognition. That's the degree. Similarly, I have Ministry of Commerce and Industry, I have Ministry of Finance. Now, both are parallel bodies which have individual recognition. Now, my Ministry of Finance and Industry, Commerce and Industry, is a bigger body in terms of giving trade facilitation to the businessmen. But the tax regulation, the autonomous of tax, like CA Institute, is with Department of Ministry and Finance. So my Ministry and Finance collects the duty, collects the taxes. On the recommendations of Ministry of Commerce and Industry, probably exemption is given by Ministry of Finance. On the basis of the policy made by my Ministry of Finance, where additional duty, customs duty, etc. is levied, the Ministry of Commerce and Industry may give a relaxation, may not give a relaxation. So both are complementing together. When it comes to the procedural matters, all imports and exports are dealt with my Ministry of Finance. So I have a proper officer who's called Customs Officer. Also, there is a procedures which is there under Customs Law. I have Customs Act, I have Customs Tariff Act. So I have my individual act for regulation of collection of taxes. Only as a trade measure, FTP, foreign trade policy, comes and gives us an incentive, comes and gives an advanced license, comes and gives an authorization. So these are all complementing each other in their own individual stand. My objective of commerce and industry is a bigger object. What is that bigger object? I support your business. I recognize your presence. I understand the concerns. I get into a trade agreement with the other nation for your trade facilitation. This is a macro role which is done by Ministry of Commerce and Industry. Hope we are clear, Namrata. Let's go further. And I read your compliment, Harshit. Nice to hear that. We enjoy learning only when we have these kind of practical examples now. So let's learn in a better manner for us to remember things and appreciate the subject in a better fashion, right? Let's move further. Exemption from policy and procedures. Exemption from policy and procedures. DGFT may, in public interest, pass such orders or grant such exemption, relaxing or relief as he may deem fit and proper on the grounds of genuine hardship and adverse impact on the trade to any person or class of category of persons from any provisions of foreign trade policy and procedures. So this is a phenomenon where there is a reference to public interest. So generally, any measures which are in the nature of public interest can be challenged in the court of law, which is of public interest. Reference to Article 14, reference to Article 32 of the Constitution, where is there any infringement, is there any deprival made to your business by not giving this particular incentive. This is how, when we read a law, we have to understand what is the intent of the law and how it can be used, how it can be questioned or challenged. While granting such exemption, DGFT may impose certain conditions. Now, this is a policy matter. In the sense, there are few aspects which cannot be compared. There is one legal maxim. There is a legal maxim called promissory estoppel. Promissory estoppel. Applying this particular promissory estoppel, courts have always said when there is a certain conditions imposed, which is a policy matter, it cannot be challenged. However, if in the public interest, if the trade organizations come together, probably this would be referred for examination. It could be referred for examination. This is what we need to understand. After consulting norms committee for fixation of modification of product norms under all schemes. EPCG committee nexus with capital goods and benefits under EPCG scheme. Policy relaxation committee for all other issues. Now these are various wings internally what DGFT has got to understand the trade measures, requirements and to control the benefits available. If any importer or export is aggrieved is not happy with the decision by policy regulation committee or a decision of any authority, specific request for personally like appeal, what we have in income tax and indirect tax, has to be made to DGFT. So we have this regional authority to whom we write a letter as a grievance. Sir, you have given so-and-so policy, you have given 90 days as a point in time for within which I have to do a redemption. Some trade practical reasons, 90 days is not possible. Extend 90 days to say 180 days. DGFT may consider the request for relaxation after consulting the norms committee, EPCG committee or Policy Regulation Committee, and the decision is conveyed in pursuance to PH, and which is binding on the particular trade body. Government is committed to easy and speedy reprisal of grievances. This is a regular norm. This line, other authorities involved. My other authorities are CBIC, RBI, state GST departments. So these are the three departments where always my policy matters are in conjunction with the these boards before I frame any policy. Like I cannot give an exemption without consultation with CBIC or without consultation with RBI. Like example, foreign regulation. RBI says that repatriation of money in foreign currency is compulsory. RBI also says that money received in convertible foreign currency cannot be kept in EEFC account. When you do your statutory audit, probably at times you would test that money which has come in convertible foreign currency at the year end, when you need to report, you do the translation and you report that particular currency. However, you have a checklist, like assuming there's a company, this particular company has got 5 SEZ units and 10 non-SEZ units. Now, what happens there? Say, I have one bank account called State Bank of India. Money received by SEZ, which can be parked in EEFC. Money received by a domestic tariff area, it cannot park its money in EEFC. Rather, the foreign currency should be repatriated into the convertible foreign currency. So there, you carefully examine the norms laid by RBI for each of the business entity. Also, my foreign trade regulations are in conjunction with my RBI. Contents of foreign trade policy. Now we are coming to look at the broader picture, what is there in my foreign trade policy. So when I look at my foreign trade policy, the starting point is the policy 2023. This policy 2023 has got 11 chapters. This 11 chapters, out of that, the first chapter, out of these 11 chapters, the first chapter and the third and fourth chapter, we are going to study in detail in relation to this foreign trade policy in our institute material. Next, we have rules, which is called Handbook of Procedures, containing 11 chapters covering procedural aspects of policy. This has been notified by the DGFT on 1st April 2023. So for your May 2024 attempt, this is what relevant for us to study. It is amended from time to time as per requirements. Also, ANF, that is your forms, containing various appendices and forms relating to procedural aspects, provided under this policy and procedures of SION, Standard Input Output Norm, of various products. So there are forms which are connected with this industry specific norms. Based on CR, exports are provided to facility to make up duty-free imports. So they'll say that based on your standard input output norm, I'll decide how much of volume of imports should be exempted from customs duty. Then classification of your goods into 2 schedules. Schedule 1 deals with your import policy, like your Customs Act. Schedule 2 deals with your export policy. Like you have import tariff in Customs Tariff Act. I have Schedule 1, Schedule 2. Similarly, in CTH, that is your classification of goods, we have Schedule 1, Schedule 2. And SCOMET list, as I said, this is a technical term where all your special chemical, organism, then materials, equipments, and technology, which is having a specific requirement under World Customs Organization recommendation. This list is also provided which goods are freely tradable, which goods are regulated with a restriction. For this box draws your entire summary of above reading. My foreign trade policy, that is a handbook of procedures under foreign trade policy, CGST Act, SGST Act, IGST, Central Excise Act, Customs Act, all notifications issued hereunder from integrated scheme of indirect taxation. All these statutes have to be read as a whole, not in isolation, since there are series of statutes relating to related subject matter. So as a professional, once we get qualified, I need to read all these acts together to enjoy the scheme of taxation for benefits given in the various laws. Now, scope of foreign trade policy, the procedure handbook of procedures, 11 chapters. Legal framework, this gives an overview. Most of what I have discussed in first 30 minutes, whatever I have explained today in the first 30 minutes is the overview of the legal framework, trade facilitation. Means why this body is in existence. General provisions regarding exports and imports. This is a procedural aspects. Like I gave reference to state trade enterprises. So here, what goods are, again, also I gave a reference to PRR. Like RRR, PRR. Prohibited, restricted, and regulated. So this general provision says how goods are imported and exported. Developing districts and exports hub. This is a continuation to point number 1. As a policy matter, how do I identify a particular industry or a trade, and how do I develop from various districts? Duty exemption remission schemes. Now this is a remission scheme again as a trade measure from point number 1. APCG scheme continued from point number 1 as a trade measure, trade facilitation. What do I do? Export oriented units, EHTP, so STP, and biotechnology park. Now, examination, this could be tested for 4 marks as a theory question where examine and explain the trade facilities and measures available under foreign trade policy in relation to EOU, EHTP, STP, or BTP. Deemed exports, this is a like this topic actually should have been discarded after GST has come into picture. Unfortunately, this is like an orphan, but still taken care under because of foreign trade policy. I repeat, like there is the reference of this entries, EOU, STP, etc. All these particular entities have seen a sunset clause after GST has come. Under section 147, we have studied what is a deemed export. The same is derived from your customs law and foreign trade policy. As of today, all deemed exports, there is applicability of GST. However, foreign trade policy has got a special attention, special importance to this particular area called deemed exports. When I come to the chapter, I'll explain you the background. Quality complaints in trade disputes. This is again a trade measure. How my foreign trade policy has brought a e-governance. E-governance. In nutshell, when I say quality complaint in trade disputes, probably, let's take example, say, Shailesh is a manufacturer of, not manufacturer, Shailesh is a processor and trader of, let's say, pulses. Shailesh has exported a particular brand of groundnuts to Spain. On receiving this particular consignment, the customer raised a complaint that, look, this is of a third grade quality. Rather, what we have asked you is for a first grade quality. Now, there were some defects, some issues escalated. Now, here, how do we bring trade measures as an international trade to handle this complaint, to handle this particular trade dispute? Like example, my customer in Singapore asked for 10 pairs of shoe, which is of a, say, feet size of 10. What I've done, instead of sending 10 pairs, I've sent 8 pairs. Instead of sending size of 10, I've sent a size of 6, 8, 10 in a combination together. Now, it's a trade dispute. So here, my foreign trade policy brings measures. How do you control? How do you penalize? How do you punish? And also, how do you set the standards? Like example, the quality complaints. There is a certificate. There is an examination. There is an inspection. Now, if there is an inspection report, certificate, assessment done, this cannot be challenged overseas. The quality which is there in Spain, the quality which is there in US, the quality which is there in China. Now, all these parameters, if it is tested, approved at Indian waters, that cannot be challenged once again at the receiving end unless there is a some other incident which is beyond control. So here again, my objective of foreign trade policy is to frame this particular measures for complaints and trade disputes. Promoting cross-border trade in digital economy. This is for this star status read with your what do you call export promotion operator features. Like they say, so any goods originating from India who have got 5-star status should not be kept waiting for beyond 1 hour. Let that have a green channel to flow to the domestic country, domestic tariff area. So all these are the trade measures which are again part and parcel of my trade policy. SCOMET, special chemical organism, material and equipment and technology. Now, importance of these items as per your recommendations of World Customs Organization. How do we deal with these items? First aspect, trade measures and ease of doing business. How do we ensure that DGFT has formulated policies for trade facilitation? So this is done in relation to in consultation with Export Promotion Council and Trade Industry Body. Trade Industry Body, like example, we have this PhD Commerce. Also, we have something called, say, FICCI. Also, we have, say, BCIC. Now, these are all trade bodies, like one more authority, say any other STP. Now, these are all trade bodies which facilitate the ease of doing business. And there is a committee called National Committee on Trade Facilitation, which is constituted to facilitate my coordination and implementation of trade-free provisions. Improvements in ease of doing business through reduction in transaction cost time. Reduction in transaction cost time. Online filing, online approval, online payment, online assessment, online grievance, online certificate. So there are various measures which are being brought day to day to reduce your transition time, transaction cost. Reduction in cargo release time. Now this is a procedural aspects where assessment, approval, appraisal, and other aspects. Paperless regulatory environment, which again happens through online. Improved investment climate through better infrastructure. Improved investment climate, road facility, then your connectivity to ports, connectivity for clearance, your knowledge hubs. Now, these are all a couple of various measures to be taken for trade facilitation. Now, there's one scheme called Authorized Economic Operator Scheme, AEO. Now, students, I'm touching now from here, I'll be touching those topics which are to be tested from examination, or those topics which I feel relevant for you to know the background before you get into the industry. First topic, Authorized Economic Operator. And between couple of topics, I missed it, which I feel it is self-study and not that importance. Under AEO program of Indian Customs. This is a program launched by Indian Customs. A business entity which is engaged in international trade. That is purchase and sale of goods or services, is granted AEO status. If approved by customs as compliant with supply chain security standards. There's a satisfaction. Such entities are considered as trusted trade partner of Indian Customs. Trusted trade partner. Example, I declare that I'm dealing with like eatables, eatable food products, say chili, garlic, or papad, etc. I should not export nappy pad in the pursuit of your human consumption food products. So I should be a trusted trade partner. AEO status holder gets extensive benefits, including preferential custom treatment. Preferential customs treatment. You remember PROD, preferential rate of duty. This like preferential rate of duty under Section 14. Preferential customs treatment in terms of reduced examination, faster processing, clearance of cargo, deferred payment of duty, direct port entry or delivery, enhanced border clearance privileges in mutual recognition agreement of partner countries, greater facilitation and self-certification. Look at the benefits they have. As a manufacturer, now we have to get this EU certification. Now, this is not just given to every person who exports goods worth, say, 10 lakhs, 50 lakhs, 20 lakhs. There's a certain threshold limit. Like they say, up to $1 million exports or $20 million exports. So I have to meet a criteria of, say, 20 crores, 30 crores, etc., where I'll get this recognition. Not every person gets this AEO recognition. Point number one, this is recognition given by Indian Customs, which is parallelly recognized by DGFT. So here, DGFT as a big brother, as a co-brother, DGFT says, whatever trade facilitation recognition is given by Indian Customs, let me give these benefits. So this paragraph is under DGFT. What they say, I ensure that there is a extensive benefit which is by way of preferential customs treatment examination. Examine the benefits of AEO under DGFT provisions. So first thing, like your preferential rate of duty, preferential customs treatment, royal treatment, like VIP treatment. I get a preferential customs treatment, VIP treatment. We say VIP treatment. So I get a preferential customs treatment. How? Reduced examination. When I say reduced examination, they may not open any consignment. If I have, say, 100 boxes, customs officer say, I want to examine 100 boxes. Sir, I'm an AEO. Oh, Zach, you have a very good track record. Chalo, instead of 100, I'll just do 4, 5. Faster processing. Now, generally, 1 or 2 days may take for processing. Here, within hours, processing of documents happens. Clearance of cargo. They give a immediate permission. Deferred payment of duty. I need not pay the duty instantly. I can carry the goods to my factory, pay after a fortnight. Direct port entry, direct port delivery. Goods come with a direct entry, goods go as a direct delivery. Enhanced border clearance privileges. Nepal, Bhutan, India, Pakistan, India, Sri Lanka. Now, where there is a border clearance, there is a enhanced privilege because of AEO status, where there is a mutual recognition agreement. As of now, this mutual recognition agreement, this MRA is with US, China, then North Korea, and one more country, I think Malaysia. These are the countries where we have this MRA. Partner countries and greater facilitation and self-certification. There is a self-certification, quality, make of product, and other declarations. AEO program is based on World Customs Organization's safe framework as standards. No, that's an ancillary point. So examination, one theory question. Examine the trade facilities and felicitation available for authorized economic operator, or they'll just say AEO, like Leo, authorized economic operator. Next. Tons of export excellence. This is a new thing which we need to understand. Selected towns which contribute handsomely to Indian exports by producing goods a specified amount may be granted, recognized as TEE, Town of Export Excellence. Exports, we are excellently doing well. So I call you as a TEE. They will be provided targeted support and infrastructure development to maximize their export core competitiveness. Now, sir, how do they do that? Like example, say, what is that port we have seen? Let's take example of Kakinada. In Andhra Pradesh, there is a port called Kakinada. Goods get exported from Kakinada. Sir, I stay in a place called Godavari district. Godavari, again, like we have East Godavari, West Godavari. From Godavari to Kakinada, so there is a road infrastructure to connect to port. We don't have only through road we have a connectivity. However, the rice, the paddy, the agriculture produce which comes from Godavari districts are very rich in content. Next to Punjab, in South India, in next to Andhra Pradesh is Tamil Nadu. This Godavari districts, we have very good crop production of paddy. Now, assuming that these are in small rural villages, the towns which are connecting to those villages, they need to have infrastructure. So how do I do that? Let me have a special train to accommodate to reach to the port. So dedicated line will be laid to facilitate this particular infrastructure. Next, status holder. In AEO continuation, I get something called status holder. Export firms recognized as business leader, status holder. Like your, what I can say, FCA, ACA, and we had this new thing. C and we get some bachelor degree, semi-qualified. So like we have our recognition based on experience and performance. Similar to that is my this particular status holder. Exporter firms recognized as business leader who have excelled in international trade and have successfully contributed to country's foreign trade. Contribution. Now, so from where this contribution come? Value of exports. They are expected to not only contribute towards Indian exports, but also provide guidance and handholding to new entrepreneurs. So there is a back-to-back integration. Like the SME supports the mid-segment, mid-segment supports the large manufacturers. So there is a backward integration. All exporters of goods, services, and technology having an import-export code shall be eligible for recognition as a status holder. Status recognition depends on export performance, depends on your export performance. An application shall be categorized as status holder upon achieving the threshold export performance in the current year preceding 3 financial years. So they say year 1, year 2, year 3, read with current year. So I should have a track record for last 3 years, also continue that performance in my current year. On the basis of this track record, this performance is determined. That is called your status holder certificate. What is that? Applicant shall be categorized as status holder upon achieving the threshold performance. 1-star export house, 3 USD million. My turnover achievement should be USD million. That means to say, assuming we are in 2024, 21, 22, 23. These 3 years, I should have achieved this 3 USD million. in these 3 years. Also, this needs to be continued in 2024. Then I'll be called as 1 star. So for 2 star, 15, 3 star, 15, 4 star, 200, 5 star, 800. Examination. So do we need to buy hand? Need not be. Like star recognition status under the foreign trade policy, they may ask you performance is on the basis of your turnover on the value which is achieved current year read with last 3 financial years, preceding 3 financial years. So examination again, 2 marks, 1 theory question can be expected. Explain the star status category and basis for recognition. They'll say XYZ Limited approached Mr. X Enco firm of chartered accountants, saying that they have met the turnover of 10 USD million dollar in the last 1 year. Based on that, they have requested to obtain the star status category under 2 star category. Examine the provisions of foreign trade policy, where you'll see that for getting the star holder status, the performance will be on the basis of a threshold turnover, which is current year and preceding 3 financial years indicated as there in the foreign trade policy provisions. That would be your answer. Now, what is the advantage of being a status holder? Advantages like what we have AEO, the same benefits I do get under this particular status holder. Points which merit consideration while computing export performance. How do you compute this export performance? They say that my export performance shall be counted on the basis of FOB of exports. Now, when you look at your financials, CAF value of imports, FOB value of exports. In your notes to accounts, when you prepare your financial statements, generally, my imports will be shown at CAF value because Section 14 of Customs Act, read with your Section 14 of Customs Act, FOB for exports, CAF for imports. You see that? For computing this export performance, FOB value of exports earning in freely convertible foreign currency or INR is relevant. Sir, if I get in foreign currency, okay, INR, why you are taking INR in case of your deemed exports or supplies to SEZ. This also is considered as your exports for the purpose of foreign trade policy. So this is your point number 1. What measure? Like examination, they'll say, should I take CAF value? Should I take FOB value? In case of imports, CAF. In case of exports, free on board or free on board is something I have to take. Then, for deemed exports, FOR value, like in India, any exports in India, FOR value. And money earned in INR also shall be converted in US dollar at the exchange rate notified by CBC, applicable on 1st April of each financial year. Let's say that in case of SEZ and deemed exports, if you get INR, this INR needs to be translated into foreign currency for the purpose of calculating your status holder certificate. Granting the status, export performance would be necessary in all 3 preceding financial years. This is what examination tested as a point of consideration. They'll give you a problem where the individual comes and says, sir, I met this particular export status for 3 star, say assuming 30 USD million. I have met with this particular star status category for the last 2 years. This is what they see, right? So we have to say, for getting this status, you need to examine granting the status. The performance in the preceding 3 years is something which is important. Moving further, export performance is not transferable among IEC holders. Like your, what we can say, transfer of which license? Transfer of benefits, income tax. There's a transfer of license, right? Like transfer of your duty script. Unlike duty script, I cannot transfer like one turnover of one IEC holder to another IEC holder. Exports made on re-export basis shall not be counted. Exports made on re-export basis shall not be counted for recognition. I made an export, goods have come in. Again, rework, made a re-export. So here, what export you have done once cannot be counted again twice. Export of items under authorization, including SCOMET items, would be included for calculation. Like under authorization, exports made under my exports made for advance authorization, duty-free import authorization, or EPCG. They're saying that all exports which are to comply with your export obligation, that also have to be calculated for this star status. For calculating export performance for grant of 1-star export of such category, there are certain small miscellaneous benefits where they say, for calculating this export performance for 1-star status, they say exports by IEC holders of MSME, manufacturing units having ISO BA certification, units located in northeastern states like Sikkim, Union Territory of Jammu and Kashmir and Ladakh, and exports of fruits and vegetables shall be granted double weightage once in any of these categories. So they say that I give a weightage two times. Instead of like assuming you have 10 crores turnover into 20 crores will be the weightage for this set of people. Now this is a privilege given under my DGFT provisions. So what is the advantage being a status holder? Now what do I get that? Status holders are eligible for these below privileges. Authorization and custom clearance for both import and export on self-declaration, like AEO benefit, self-certification. Fixation of input-output norms on priority within 60 days. SION, standard input-output norms within 60 days. Like I'll give one classic example where you will see the beauty of this star status holder. To give an example, let me give this example of circuit breaker. Circuit breaker. Let me not name the company name. Circuit breaker is a electric device. Electric device. Now, assuming I'm a company having a turnover of 500 crores. 500 crores. All my products are exported to US. All my products are exported to US. What I do? I import cable. I manufacture, there is a product which is called insulator. And I also purchase from domestic tariff area. Cable is import. From domestic tariff area, I purchase some connectors. Now, it's like this. Say there is electronic wire. This is a wire in which electricity gets passed. In between, I have insulators. And there are small clips which are used for this particular cable to work. Now, assuming if there is a current which passes up to 320 kVA, there's nothing going to happen. Suddenly, if the fluctuation happens where the power goes beyond 320, assuming 330 to 350 kVA, if the power goes in between this range, then this particular insulator breaks this flow. In the sense, the power comes and because there is a break, the power does not go in further. Now, this is called my circuit breaker. I'm manufacturing this particular thing. And in my business, if you look at the components, cable constitutes 80%. Insulator constitutes, say, 16%. And local connectors constitute 4%. Now, what is happening here? I have to get my imports vis-a-vis exports, where my duty drawback, my exemption, permission. Now, assuming I import 75% of material, I have a requirement of 75% surplus to existing. In the sense, if I have to buy 100 rolls to export, 100 rolls to export, I don't buy 100 rolls. Always I buy 175 rolls. I buy 175 rolls. Why? I always keep a surplus. I know that in the process of this manufacture, there could be a process loss of say 15 to 20%. 15 to 20%, there is a process loss. Also, my availability of material should be in 30 days turnaround time. Now, this is a overall trade practice. Now, here, I as a manufacturer, I'll go to this fixation authority. I'll give the business model. I'll say that, look, sir, your customs authority is giving batch to batch. 100 rolls I'll import, 100 rolls I'll export. You're giving permission only for 100 rolls. Not sufficient. Considering my process loss, considering my turnaround time, considering my business model, I need always 175% permission for my imports. Now, this particular permission happens if you are a status holder, and this committee which is there within a span of 60 days, they give always prior approval based on your trade requirement. This is one big advantage being a status holder. Now, when I talk this to you, post qualification, if you join a company which is having a turnover of 600 or 800 crores and above, that point in time, you getting it, inducted into the company as a senior manager, as general manager, you are expected to know all these basic aspects of CON, fixing of standard input-output norms, being a star status holder. You should not blink. So what do you mean by status holder? Why is that this recognition is required? What is the paperwork required? No, you should know the basic aspects to be prepared to handle this business. Moving further. Exemption from compulsory negotiation of documents through banks. Negotiation of documents through bank. Exception are remittance receipts. So they're saying that my negotiation of documents through bank, like your, what do you call that? Credit. There is a import negotiation. We had this credit. What is it? Export credit. Export credit. Packing credit. Now, various facilities provided through banks, they say, like example, packing credit is a financing activity where on the basis of your shipping bill file, they take 15 to 20 days for processing the money. Exemption from compulsory negotiation of documents through banks. Exceptions are remittance or receipts. So here, within no time, this lead time will be avoided for star status holders. Right? Integration of my foreign trade policy with RBI. RBI in turn makes a regulation to the banks saying that any exporter who's having so-and-so star status can be relaxed with the negotiation of documents. That means no need to upfront production of documents. Once the consignment is declared and once the shipping bill is filed, on the basis of that, you can give the packing credit or your export credits processing. This can be done instantly. This is one another trade facility measure. Moving further. Exemption from furnishing bank guarantee in schemes under foreign trade policy. Now, bank guarantee is something which is a prerequisite, That means to say, I give a bond, I give a bank guarantee saying that any duty benefit I enjoy, if I don't comply with the export, you can liquidate my bank guarantee. Now, being a star performer, I have free hand. I'll go, I'll do the performance, and I get this certificate for my export consignment or import consignment. 2 stars export houses and above, 2 and above are permitted to establish export warehouse. Now, this is one biggest advantage. Export warehouse. This is one of the biggest value add in the business. I'll spend a minute at this point in time to make you understand the advantage of export warehouse. You might have read this concept called high sea sale. Something like this, where in export warehouse, I have a permission to do minor manufacture or process and export as such. So here, as a business process, there are certain processes where I need not bring to domestic tariff area. I set up a warehouse, I keep my manpower, process, send it back. That means I save travel time, I save infrastructure time, I save my financing activity. So companies of like this 2000 crores or turnover who are into this electronic gadgets, what they do, they get these electronic gadgets where assembling of this integrated circuits needs to be done. This integrated circuits, I open export warehouse where I just do this connecting conductors and capacitors for this IC. I assemble and I send back. What is being done by Foxconn Apple manufacturing activity presently is done in this export warehouse only by those star exporters, which is 2 and above. Now, this is a facility, which is a very value added facility to get recognized in your business. What happens here? I save customs duty. My money is saved. I save time. I get a manpower to work and turn around to get more and more business in this particular export warehouse. This is a value add facility which is given under star status. Moving further. Manufacturer who also status holder 3, 4, 5 will be enabled to self-certify their manufactured goods. Now, when I say manufacturing activity, self-certification. Now, generally, when the goods are exported, what the manufacturer has to do, they have to go to this FICI or PhD or we had that the other trade bodies. Now these trade bodies, they give a certificate. I come back, I give a packing list, export invoice, commercial invoice. Then this trade body will give a certificate for exporting the goods. So if I have this status, I can do self-certification. Also, industrial license. Manufactured goods as per industrial export memorandum, industrial license, in letter of intent as originating from India. That is your Make in India, with a view to qualify for preferential treatment under special agreement. So whenever I want to get this preferential agreement, manufactured in India is something, originating in India is something which is important. So to get this certificate, there is a self-certification. So what happens if I don't have self-certification? I go to these trade bodies, and this trade bodies or the consent RA. Who is the consent RA? STPI. Either RA or STPI or these trade bodies give a certificate, which is all avoided in case of these bodies. Status holder shall be entitled to export freely exportable items on free of cost basis for export promotion subject to specified annual limit. Generally, this is up to for imports, 3 lakhs is a turnover limit. Exports generally, there is no limit. Status holders shall be entitled to export freely exportable items on FOC basis. That is for export promotion, subject to specified annual limit. Status holders would be entitled to preferential treatment on priority of their consignment by the consent agencies. This is continuation of this particular point. Now, these are all trade measures which is there separately for AEO, separately for star status holders. Then export hub. This is a continuation of trade facilitation, chapter number 1 of your handbook procedures. Let me see if any doubts before we go further. Students, hope you are enjoying reading this book. Hope you're not getting bored. Harshit says, sir, I have applied for 3-star status holder, but rejected by the offices in Bangalore. They have mentioned some reason. I would like to listen, know what is the reason, so that I can throw some light on this. Please give some example of status holder regarding turnover in Excel. This is too technical, Harshit, because if you're into this, you will enjoy. For other students, it becomes too technical. Let us look at the macro level, and where there is no little depth we need to travel, I'll touch upon. FOR, free on road. Namrata, export through vessel, export through air, I call FOB. Exports through road, I call FOR, free on road. This is a difference. Also, in DGFT, FOR I use for the reason deemed exports and deemed exports along with SEZ. For DGFT purpose, if I am a manufacturer in India, I don't export actually out of India. I don't take the goods out of India. Rather, I supply the goods to SEZ unit. For my export obligation, the supplies to SEZ is also considered as exports. There, I don't refer to FOB, free on board. Rather, I refer to FOR, free on road. Hope this is clear, Namrata. Average for 3 years? No, ma, it is continuous. Yeah, you can say average for 3 years. I should have so much of turnover. I think Munish Kumar is asking this question. Average for 3 years. Is it for star status, Munish? If your question is for that, I would say, yeah, I continue, every year I should have minimum of that. Could be read as average. Ma. Harshit says actual user condition is not transferable. I do agree. We are going to discuss this actual user condition in a short while. May not be in today's session, maybe in the next session. Actual user condition, it is little technical. I'll discuss on this topic of actual user condition in a short while, Harshit. Thanks, Munish. In relation to the export body, CAA. CAA is another body. I was actually having in back of mind, but it skipped. CAI, Confederation of Indian Industry. This is one another authority who also gives a certification for country of manufacture. Namrata sister, please repeat second point of benefit to status holder. Benefit to status holder, second one. Definitely, Namrata. Acha. Fixation of Sion. You remember that example I gave circuit breaker, Namrata? I gave one example of circuit breaker. So here, for giving a benefit called drawback, let me say duty drawback. Duty drawback. Sion helps to fix the rate. In the sense, inputs, process, output. Inputs, I have cable, I have insulator, I have conductor. Process, I do assembly, I do say small of I would say what you call molding, plus there is a small process, technical name, like no, they call something like where they take up the cable small portion and they do sealing off. All that put together, I get a final product called circuit breaker, CKT, circuit breaker. So here, assuming 1,000 rupees is my import purchases, say 100 rupees is my process value addition, plus 200 rupees is my markup, entire put together 1,300 is my sale price. Now, assuming I have to fix a duty drawback on the basis of percentage of imports lying in export product. Here, using SION, I'll get to know that my conductor, when I say all these inputs, three inputs put together, 1,000 rupees is cost. Out of this, my cable alone is costing me, say, 800. So I'll say 800 divided by 1,300. I'll get a percentage. This is a particular percentage relevant for me to fix drawback on the basis of customs duty paid. Now, this is too technical, Namrata. I'm just giving you a background. On the basis of this percentage, which is available in SION, the committee fixes what is a drawback to be given on the basis of customs duty suffered on this particular input. So, now all this activity, SION may be available, may not be available. Now, assuming for a moment, I gave the example of circuit breaker. Namrata happens to be a finance manager for this particular product. And Namrata believes that now 800 divided by 1,300, assuming for a moment, this comes to 60. Let me just check the math. I get 61.5%. I get 61.5%. I get 61 or 62%. As per this SION available, they have given only 40%. They have given only 40%. Now there is a loss of 20% benefit because of this disparity between your actual process. So what Namrata will do, she will approach this committee saying that, sir, these are my facts. Based on my facts, based on my process, please give me a SION for my product. So when Namrata files an application, you being a status holder, maximum within period of 60 days, they study your inputs and they say, for this particular circuit breaker, assuming this is falling in chapter 85, this is the percentage of component of composition of imported goods lying in output goods. So this is the advantage being a status holder. Generally, the usual industry practice, it takes 6 months to 1 year for getting the SION fixed by this committee because so much of technicality is there. So instead of waiting for that 1 year, because your business is in crores, every month, 80 to 100 crores or say 200 crores worth imports happens. So every crore, you have 20% of customs duty drawback benefit being lost. So not to wait. When you apply, make an application, because you are a status holder, within 60 days, committee looks into your application and they say, okay, standard our policies is 40%, but for you alone, I'll fix it for 62%. This is how it works. Hope this is clear, Namrata. This is my status holder advantage for fixing the SION. Standard input output norm. Standard input output norm. How much I consume, how much output is generated. How much is my input, valuation, and output. So when I have, say, 100 cables of output, based on 100 cables, I work back and say there is an import of 82%. There is an import of 65%. So I go back from output to input based on standard input output. That's the advantage for me. Noted, Ashit. If you can give the basic reason, it will be helping me for also to see do we have anything of this sort which I can share my experience with you, ma'am. I'm not supposed to share my credentials, Ashit. I cannot share any of my personal credentials. I'm bound with institute regulations. You can just share in the window. I can explain you. Don't worry. Then moving further. Oh, we are at 8:50. Another 10 minutes. Okay. I explained in a very short manner developing district as export hubs. As I gave example, Kakinada Airport, East Godavari, West Godavari. For the purpose of identifying that particular Godavari district where there is no connectivity through sea, there is no connectivity through air, there is no connectivity through train. The only connectivity they have is by road. So when you have such kind of situation, looking at your capacity for your contribution to that industry, this districts will be given a special importance to develop and focus on the respective districts. Quality complaints and trade disputes. I gave one example earlier. SCOMET. In short, I'll just read this and I'll explain. India is a signatory. India is a signatory to international convention on disarmament. Like disarmament is your arms. Read this particular small term. Arms. Dealing with your guns, explosives, or anything to do with those kind of gadgets. Convention. There is an international treaty with respect to arms and non-proliferation as a member, not to explode, not to take an undue advantage. As a member of major multilateral export control regime. Like a couple of countries like South Korea and all, they don't have these restrictions like nuclear testing. A particular nation want to do any nuclear testing, they do on themselves. They don't abide with the international conventions. So these are the exceptions where they say, as a SCOMET, as a member of this particular treaty, we agree to the disarmament and non-proliferation. So resultant of that, they say, export of dual use items. When I export, which can be used for manufacture, which also can be used for explosives, including software and technology, having potential civilian or industrial applications. I think I gave an example of dimethyl chlorine. So here, any of those components which can be used for any purpose, they say, use in weapons of mass destruction is regularized under foreign trade policy. So items which are declared under this particular list are regulated, This is a very, very big responsibility. Now, as a civilian, as a commerce student, as a science student, as a CA student, what we read is, sir, oh, income tax provision itna bhayankar hai. Sir, this GST provision is so pathetic. And we comment. But look at the policy makers. Look at this law. Imagine for a moment if SCOMET is not identified. Like, see here, we are looking at a international treaty. We are looking at international practices. As a part of that, this DGFT has so much of responsibility to identify all those goods, all those services which are of this disarmament and proliferation. I have to control, I have to regulate. I need to have a knowledge. Like example, say there is a in African countries. In African countries, there is a this what do you call leaves. the oil extract of leaves, if mixed in a particular coffee or tea and consumed, it may lead to disability of vision. Same time, there are few leaves which are very hazardous and dangerous. Like loss of life may also happen. Now, as a particular policymaker, I should know what is threat to human life. What are the ways the goods are going to travel? What are the ways services are going to happen? What are the ways funding is happening? Now, RBI control, RBI regulation, your foreign trade policy, customs policy, your scientific and technological knowledge, all these organizations come together, they make a policy, they make a regulation, and this is how these products are notified. So they say that it is either prohibited or is permitted under authorization unless exempted. SCOMET list is our national export control list. National export control list. National export control list of dual use items, munitions and nuclear related items, including software and technology, and is aligned to control list of all these multilateral export control regime and convention. Now, this is a agreement and conventions. I agree with those mutual treaties and conventions. So here I have an export list where there is a dual usage. There is a dual usage. So controlling, regulating the export list where there is a mutual or I'll say dual usage. This is the SCOMET list. Examination, they're not going to test you. Give the examples of SCOMET list. Probably examine the provisions of SCOMET under DGFT, where you'll just throw upon this examples and say this is how these aspects are regulated under DGFT. Students, we are at 8:57. If I start with provisions regarding this import and exports, this itself will take another 10 to 15 minutes for me. I'll see if there are any doubts. If not, we will wind up our today's discussion. Namrata, dual usage. Simple, man. This, what you call alcohol. My alcohol, which is used, I can use it for medicine. I can use it for explosives. I can use it for, what do you call this, perfume. So I have multiple usage, right? Okay. So students, there are no other doubts as of now. Positive this time. We'll continue our discussion and we will read the important aspects of advance authorization, duty-free import authorization, EPCG. These are the three important topics which are earmarked for our next class discussion. Right? Till then, good night, goodbye. Come with the revision. See you all.